Hey everyone, and welcome to the PivotBoss Closing Report for January 12th, 2016. I am Frank Ochoa, aka PivotBoss, and here's a look at the daily chart of the ES. You can see here we've had a bit of an indecision day here where prices traded both above, above the 1929, 1926 key zone there. Not really finding much acceptance, and also trading below the previous week's low of 1910. And also seeing buyers come in and defend for the second straight session. So right now, really what this is a very impressive decline here and a kind of mild bounce. That little mild bounce right there will likely continue to be defended by bears looking for further overall downside price discovery. Now, based off of the current high and low of the week so far, we still haven't reached our primary target on either side. We have a bear target here at 1881. We have a bull target at 1948. That's a zone right there. One of those should be hit. I would say that if price bounces into 1948 to 1950, this could offer a significant selling opportunity for a shot at seeing another round of weakness into 1879 and below. Now, one thing to keep in mind as a last final point here, given this recent sell-off here and the range that we saw, it is completely conceivable that we continue to trade in a range here as the market continues to digest the recent decline. And if that range does develop, that could give us better boundaries to watch for expansion ahead. All right, now taking a look at crude oil. Here's crude oil in a daily time frame. What you're seeing here is basically price dropping through support. We had support, remember, at 35.35, key level at 34.80. Price just went offered through that zone. We mentioned any bounces to be selling opportunities. That was the case for a continuation. Here to begin the session, we saw price go offered here at the previous week's close price. Went offered through the previous week's low price. And then when price came back to the previous week's low from below, that price was offered. And what we've seen is a significant sell-off into price levels below the 30 handle for the first time in many, many years. So again, we knew this was coming. We knew expansion was likely to be to the downside. We had our key targets to watch out for. All of them have been reached now except for that 28.91. That's the last major target here sitting on the deck is 28.91. Below 28.91 would be the 100% expansion target at 27.21. So overall continued weakness is likely ahead. Any push back above 32.10 opens the door to retesting 36.88, which is composite VPOC. All right, let's take a look at gold. Here's gold in the daily time frame here. As you recall, prices went bid through the previous month's high, 1088s. I mentioned by going bid through that area, reaching our primary bull target at 1112, that was indicative of continued overall strength, especially if prices pull back to 1088, expect bulls to defend for another leg of strength ahead. And that happened today. We saw the continuation and push into price levels below 1088s. Right now, this doesn't appear to be a rejection of those price levels just yet, but it may be getting close. Failure to hold above 1088s would open the door to retesting 1072s. Since that value was bid in the prior period of time here, expect bulls to defend it again for another wave of strength ahead. All right, taking a look lastly at the NQ. The NQ had a significant sell-off below 44.49s there. As you recall, earlier in December, I mentioned that this failure to see acceptance above the 47.23 here implied a likely return all the way back to 44.49. It took a little while, but we eventually got there. The first trading session of the year. Then I mentioned if there's a failure to hold above 44.49, the next downside targets would be 43.11.5, and then you have the one below it, which is 41.79, I believe, 41.74. So we could see further weakness into that zone. However, what we're seeing right now is a bit of a bounce and trade here as the market digests the recent move lower. I still believe any bounces should be seen as a selling opportunity for longer-term weakness ahead unless price can resettle or reestablish itself back above that 44.49. So short term, expect bears to continue to defend the top end of this range. You look for bulls to defend the bottom. We could see the development of a trading range develop on these lows. Failure to hold above the 43.11.5 would be an early indication that another wave of weakness into 41.74 is likely to occur. All right, that's it for now. Let's see how this thing plays out the rest of the week. Good luck and trade well.